Hello traders, welcome to our Monday weekly analysis for November 13th to November 19th, the week of almost third week of November. Time goes fast, as I mentioned, we are almost finish our last quarter of this year. So once again, I do have to remind people, be careful for the last quarter. It's just, psychologically, no matter what happened, it's really at the end of the year, you pretty much, there's not much things you can do, So I do just remind people to still trading in your own consistent approach. That will really enable you to, take up whatever you learn this year to apply next year. The last thing you want to do is to try to make back your loss. Maybe you haven't had a good year so far, so you're trying to make it back. That often end up for you to lose even more. Or you already had a good year and you try to make it more. You try to be more aggressive because maybe you have a certain benchmark you want to hit. Then what happens is that if you tripped, it's not only you are going to give back a lot of the earnings you already had, it's basically a big psychological blow, and that you will carry that into next year. So it's just not a good thing to suddenly change the way you trade. The bad thing for this last, a month and a half for 2017 is really just to take it slow and slowly unwind it. Especially, I keep saying it because last 2 weeks of December is pretty much out. You have to understand it's holiday season. The market is going to be very thin liquidity all the way until the first 2 weeks of November. The first 2 weeks of January, it's also going to be thin liquidity. So if you're looking at the calendar, you really have this last month from today, November 13th, to maybe December 13th. Mid of November to mid of December. I would say this is actually the official last month because we don't really want to do too much at the last 2 weeks of December. Okay, so for that being said, over the weekend there is updates for British pound. Now, as you can see, just in this chart, it gaps down, right? And whenever you gaps down, means something really happened during the weekend. If you're looking at other pound pair, gap up, it's exactly the same thing. You have this gap. So what happened, if you haven't read the news, then basically is that we have another geopolitical updates. Basically two things, to put it simple. First is that there's another rebel within Prime Minister May's own party. So as we talked about the last time, we already had a lot of doubt over Prime Minister May, pretty much ever since she lost that general election back in June. And then I think there was probably last month or 2 weeks ago, one of her cabinet member had a secret meeting with the Israel officials. Anyway, that person got fired within a week. Another member of hers had a sexual harassment case. So all these things, it's not really about the content. Again, it's just painted a big picture that the government had lost control, not only within the country, but within her own party. So we already had the same events previously that members within her own party wants to oust her, and they basically want her to step down. And now over the weekend, another thing happened again. Now it seems that people are start putting up another action to make her resign, basically. If that's the case, that's another uncertainty over UK on top of the current situation, which is the Brexit negotiation. Now, negotiation right now basically comes down to money. The reason EU and UK had this kind of negotiation, basically a big part is this so-called breakup fee. So basically, UK and EU has to figure out a fee that they both agree on to pay, and in order to have more negotiation going on. So basically, what the attitude for EU is that you gotta pay up first before we, move on and talk about anything else. But the attitude for the UK, of course, is that let's talk about things first before we agree on the payment. So really, sounds like a divorce. That's how most divorce work basically. So that's what happened from the geopolitical side. Now, don't forget, all this is on top of the Bank of England event last week, and that had basically give British pound already a very bearish sentiment because the market perceived Bank of England to hike the rate as one-time deal. That means there's no more rate hike for a near future. So this basically has put British pound in a very negative position right now, fundamentally and sentimentally, and that's why you have this gap down. So if you zoom out, you realize it's really a huge drop for British pound ever since the beginning of November, right? It just dropped for pound cat, for euro pound, or for cable. If you zoom out, that's really what happened right now. So that's the notable thing over the weekend. Other than that, we don't really have much updates, but let's still quickly go through it. Just give me 1 second. Let me find out. So let's go through the Forex factory first. Okay, so basically, weekend, not much going on aside from what happened in UK, and today is a bank holiday for Canada. I think it's probably a bank holiday. I'm not sure if it's bank holiday for US or not. But pretty much Monday is usual quiet day. Now, later in the Asian session, you will have Chinese data. Again, not much to trade, but if you are an Aussie dollar trader, once again, you do have to watch out for the Chinese data. Tuesday, we will see another important data, which is the CPI from UK. Basically, if you just take a quick glance, this week is really the British pound events. You have Tuesday CPI, Wednesday you have the employment data, and unfortunately, and on Thursday you have retail still. But the British pound already started the week with a very negative sentiment. I do have to remind you that whenever you have a negative sentiment or positive sentiment coming from geopolitical events, it's hard to know how sustained that sentiment is going to be. So who knows? Maybe tomorrow you have a news that PM May had reconciled with her party member and now everything's fine. And maybe you have another positive comment from EU negotiators saying that, okay, we are having a good advanced negotiation with UK. If you have this kind of thing, of course, British pound is going to turn around, become very bullish. So the thing about geopolitical sentiment is that it's easy to see because every news will report on it. But it's hard to know how far and how strong or how sustained that sentiment is going to be. So you don't want to just trade the geopolitical alone unless you are a day trader, then that's another story. But if you're a swing trader, you do want to take in consideration for the economic side. Now, I personally short British pound last week already. I'm looking forward to sell even more, and the reason is because not only because the political sentiment, I didn't even know it's going to happen over the weekend. The reason to sell British pound or to put in a bearish position was purely because Bank of England last week, the Bank of England result had been perceived as a negative event. Now, because of that direct sentiment coming out from the central bank, it's very sustainable. So that makes me interesting to sell British pound. This weekend, this geopolitical event, that's just an add-on. That's just a surprise. But of course, I'm happy about it. So tomorrow, the CPI, what's going to happen is this. The expectation is already at 3.1%. That means if we have 3.1%, you're not really going to see too much bullish sentiment because it's already being expected. So for British pound to turn around for this week, the geopolitical events that has to resolve. So as long as right now we still have this kind of political turmoil within Prime Minister May's party, it's hard for British pound to suddenly. You have to think for pound buyer. It's hard for pound buyer to suddenly wants to buy pound in front of this kind of event. So first you have to watch out the political events unfold, and then you have to see if the CPI can have something that's so higher than 3.1%. Because if you have 3.1 only, that is not going to give British pound too much upside movement. If this happened tomorrow, that will paint a more firm picture for British pound. Then we will see how the employment data come out. Because to be honest, this really have to depend on the CPI first. So there's a couple of scenarios. You might have a very positive CPI, and on top of that, the geopolitical events suddenly dissolved, everything is fine. Then that will turn British pound around. That's scenario number one. Scenario number two is you have a high CPI, but the political events is still turmoil. Then you will have a short-term momentum to the upside, but very quickly it will just providing you another retracement to sell British pound. A third scenario, of course, is you have CPI less than 3.1% while the political situation is still worse. That will really continue to pressure British pound. And of course, fourth scenario is you have a very low CPI, but the geopolitical events has resolved. Then that will basically hedge out each other. So British pound is still going to resume the previous sentiment, which is still a negative sentiment. So really, if you're looking at in this kind of different direction, I would say the probability for British pound to weaken is still quite high. Then of course, once you have the CPI reading, then we'll know how would you like to play out this employment data, because employment data, of course, is important, but not as important as CPI. So we have to see how the inflation come out first. We will decide whether this data is going to give the continuation for the trend or a reversal or just a retracement. Tuesday, other than that, ECB Draghi speak. Now, right now, Euro is very flat. Okay, let's talk about Euro. Euro right now since the October meeting, really there's not much expectation or anything exciting for Euro at the moment. And that doesn't mean Euro is bearish. Okay, Euro is neutral for me. And the interesting about Euro is right now, it has to, especially for this week, it really depends on what happened to British pound and US dollar. And that means Euro itself is a neutral currency. I'm not interested to buy or sell as any other catalyst for Euro, because the fundamental basically is not that important for Euro. Everybody know that in 2017 they are doing pretty well, they are recovering, but the really key point is whether ECB is going to tapering more, or when are they going to put the interest rate back to normal. Now, of course, in October, market was quite disappointed because they didn't see what they wanted to see. They didn't see a hawkish ECB, basically. So right now, Euro is a neutral position because it's not really a weak currency per se. The economy is still okay. So it really depends on what happened to US dollar and British pound. Because Euro dollar, don't forget, it's the most tradable currency pair. So this week, if you have a tax cut bill that end up badly, if maybe the Congress completely reject the tax cut bill or anything like that, then you will see Euro dollar rebound to the upside. On the contrary, if you have a very positive US dollar, then you will see Euro dollar keep going down. Same thing for Euro pound. Right now, if you look at Euro pound, it's already an upside movement just because British pound has weakened significantly. So if that's the case throughout the week, then Euro pound will most likely keep going to the upside. And you have 3 central bankers speaks on Tuesday, tomorrow as well. I really don't think too much going on right now. You have to understand first, Carney is not going to make too much, or last time Carney speaks, trying to be very optimistic, didn't really provide too much volatility for the market. Right? Again, I already always stress that to trade or to speculate in the financial market is not only about the fact, it's also about how the market and traders react to that fact. So no matter how positive currently trying to sound, if the market and the trader is not buying that, then it is useless for the central bank to give a forward guidance by just talking about it, right? That's the first tool to talk in order to basically change the market direction. If that doesn't work, then they have to do something else. So right now, currently it seems that his word or comment has been quite disregarded at the moment. Now, Bank of Japan, not really going to give you too much surprise. They are still the recovering, but the inflation is still very, very low. So they are not going to change their policy within the near future. And as for Yellen, now she's not going to be the chair for 2018. That means right now Powell will have more say. Right now market starts shifting to maybe they want to listen more about a new chair, not the old chair. So again, that had disregarded Yellen's speech. Also, PPI coming out on Tuesday, not gonna change too much. And let's see, they have GDP from Japan, price index from Aussie. Now Wednesday, again, employment data from UK, and then you have a CPI from US. Now this will be interesting. Again, CPI is really the lagging indicator, the only thing that basically the missing piece for US. So regardless to that, this week I still think what's going to drive the US dollar is the tax cut bill. So it's really coming out from the geopolitical more than the CPI itself. What's going to happen? You look at expectation. It's already a lower expectation for headline CPI. The CPI is that not much to expect it, right? People already know CPI is lagging. That means if you have a very negative CPI, it's not really going to tank US dollar too much. People already thinking that, okay, we know CPI is not picking up as fast as the central banks wants it to be. On the contrary, if you have a positive CPI, that will give US dollar another surprise push. Because of that, I'm still more bullish for US dollar at the moment. But it really depends on how the tax cut bill play out. Crude oil coming out Wednesday. Now for crude, if you look at an oil market, it's quite surprising. We are still holding up well in this kind of support area. So again, I do have to remind you, this push was coming from the Saudi Arabia, the recent political drama. November 30, we will have the final meeting for OPEC. Then they will decide whether they are going to extend the oil supply curve until 2018. Now, right now, the market is expecting them to do that. If that's the case, that will be further supportive for the oil market. However, if they delayed or if anything happened, they decide not to extend, that will be a very negative sentiment. So you do have to watch out for that. And of course, anything happening in the oil market will directly impact Canadian dollar. And speaking of Canadian dollar, let's just quickly go down to see Friday. You have the CPI from Canada. This will be important, because unlike US, where CPI is basically has been quite disappointed, for Canada, the data has been quite well. But right now, the more important thing is that Bank of Canada is in the observation mode. So right now, you have to watch out for the three major economic data: the CPI, GDP, and employment. If we have a continuation of positive data coming out from Canada, the market will be once again expected for another rate hike coming out from Bank of Canada, will further push Canadian dollar up. Right now, my current bias is also already very bullish for Canadian dollar, regardless of previous. Again, I was saying that previously CAD was bearish. That was coming out from the disappointment from Bank of Canada not being hawkish again. But if you're looking at the overall picture, economically speaking, Canada is doing very well. So if the economic indicators can continue to pick up, then we will see Canadian dollar continue to go high. Okay, that's back to Wednesday. So Wednesday night, you're also going to see a labor market data from Aussie. This is not a tier 1 data for me. I know employment data, I just say it's important, but for Aussie right now, it's a very neutral currency. The central bank is still not in a hurry to hike. No, although the commodity market is still quite supportive, but basically it's not something I will be so excited to buy or to sell. Now, the only currency I'm looking interesting is Aussie Newsy. Now, the reason is because first, they both are a commodity currency. That means they will hedge out the risk sentiment. Second thing is just the nature of the market. People are always very interesting to trade Aussie Newsy. The same as euro dollar. If you're trading currency, aside from looking at each country's indicators, you have to know how the market buyer and seller are interesting to buy. Because unlike stock market, you don't really have much choice in currency. You only have these few pairs to trade. So of course, there are major pairs. That means that's a pair that's most tradable, that people and traders really like that certain combination. Euro dollar is certainly one of them, same as cable. Now for Aussie, when people want to trade Aussie Newsy is always a good combination of pair that people like to sell or buy. Now because the bias is large, fundamental and sentimental speaking. So for Aussie Newsy, its general bias is going to the upside. And this employment data, it's not going to provide too much sustained reaction, because even if you have a negative surprise, Aussie is still considered a better bullish currency than Newsy at the moment. But of course, if you have a positive surprise, that's going to start a momentum. If you look at Aussie Newsy, you have a very steady uptrend, and right now it does seem like we are at a retracement. So we will see how the employment data play out. If it's good, then we will continue to take off to the upside. If it's a negative outcome, then you will have a further deep retracement for this trend. And Thursday, you will see retail sale, but this is not really that important. Really, we'll have to depend on the CPI and employment and how the political situation turn out for this week. Carney will speaks again on Thursday with another two FOMC members speaks. And finally, Friday, as I mentioned, most important thing will be the CPI data for Canada. So this week, economically speaking, yes, you do have a lot more data to trade, to play with, but the market is generally going to go with the geopolitical events once again. Especially for US dollar, you have to watch out for how the tax cut bill unwind. For British pound, you have to watch out how the political situation unwind. And for CAD, you can just purely trade the fundamental data, but you do have to watch out how the oil market turn out to be, and that will have to come out from the Saudi Arabia. Other than that, let's quickly go through my analysis. So again, for Aussie, I think it's neutral currency, both fundamentally and sentimentally. Only thing I'm interested in is buying Aussie Newsy, and the employment data on Wednesday. I do think it will provide momentum, but generally speaking, I have more confidence for Aussie than Newsy at the moment. For CAD, it's a fundamental and sentimental. It's quite strong currency, but this Friday CPI will once again give us a more clear direction. For Euro, it's neutral. It's neutral, so I will only trade it with the most traded pair. So it's either Euro dollar or Euro pound, and that means I will have to see what happened to British pound and US dollar geopolitically speaking. British pound, it's really the main event for this week, but we already started the week with a very negative sentiment. So we'll have to see how the political situation turn out for British pound. For New Zealand dollar, it's still weak for me. although last week you do have the hawkish RBNZ, but we did finish up the week with negative sentiment because the financial minister came out and gave another dovish talk. So basically, the biggest reason New Zealand dollar is weak is purely because the Liberal Party is the government right now. Now, it doesn't mean the Liberal Party is going to do a lousy job. That just means the market will not have too much confidence too fast at the moment. Like maybe next year, maybe you give them 3 months, 180 days later, then the market will start to picking up a new confidence over the new government. But that's just the nature of the market. It's not going to pick up a confidence over a new party so fast, especially it's already been regarded as not so business-friendly party comparing to the Conservative Party. So it's very hard to change that presumption, sentimentally speaking. That's why New Zealand is, generally speaking, still going to the downside. You do have these occasional events to turn upside, but for me, let's just give you a nice place to sell at a retracement. Not much to talk about Japanese yen and Swiss franc. Both are still fundamentally weak and sentimentally neutral, depending on the risk events. And US dollar, again, depend on the CPI this week, but also watch out for the tax cut bill. That will really be the highlight for 2017. The other one will be the December rate hike. But December rate hike, you will have less surprise just because the market consensus right now is already a hike. So what's going to surprise the market will be the tax cut bill. Okay, so that's pretty much a quick rundown for this week. Once again, if you're watching this video, you should be in my email list. If you're not, you're interested to subscribe. It's free. You can do that. What's going to happen is, of course, you're going to get a lot more updates. I will send you a trade alert for the week if we have any. I have to emphasize on that because although myself trade here and there, I don't like to send out trade alert that's not a high quality trade. So unless something that's really a high quality trade, otherwise I'd rather not have an alert for you guys. Just because, again, we do want to do something that's more in the swing base, that has a good high probability, has a good winning rate, a good ratio, and then it again is providing a good educational purpose that we can analyze later on. Okay, so if we have something fits the criteria, I will send out for you. Other than that, if you have any question, feel free to let me know. Okay, have a safe and great trading week. Thanks for watching. Bye bye.